Hello everyone. Today let's tackle a fear that stops so many people investing. Most think you need a lot of money, or that it's too complicated or too risky. That's just not true. You can start building wealth with a small amount, if you're smart and secure in your choices. So we put this to the test. 4 years ago, we took $100 and invested it in 5 places beginners hear about: individual stocks, REITs, Bitcoin, gold, and an index fund. We wanted to see which would grow, which was safest, and which was easiest for a beginner. This isn't about getting rich quick. It's about learning how your money can work for you over time. The best time to start investing was yesterday. The second best is right now. For each investment, we'll look at how hard it is to learn, the risk, and how our $100 performed. We'll break it down step by step with real numbers and clear explanations. By the end, you'll understand your options and see the power of starting early. This journey is for anyone who's ever felt intimidated by finance. You have the power to control your financial destiny. We're going to show you the good, the bad, and the surprising. You'll see how even a small start can make a difference. This is about taking the first step toward financial freedom. So let's get started and see where our $100 took us. Ready? Let's dive in. Here's what happened. First up, individual stocks. Buying a stock means owning a tiny piece of a company, like Apple or Samsung. If the company grows, your share's value goes up. If not, you lose. Some stocks pay dividends, but not all. The learning curve is steep. You need to research financials, industries, and competitors. It's a big risk. You're putting all your eggs in one basket. If the company stumbles, your investment can drop fast. Even with tax advantages like a Roth IRA, you're not protected from bad choices. For our test, we picked Samsung at random. No deep research, just like a true beginner. 4 years later, our $100 became $67.70 with just 10 cents in dividends. That's a loss of over 32%. Even with a famous company, you can lose money. Picking individual stocks is a gamble, not a plan. For every lucky winner, there are thousands who lose. For beginners, this is the riskiest path. The lesson? Stock picking is tough and the odds are against you. It's not a reliable way to start building wealth. There are smarter, safer ways to grow your money. Don't let hype or brand names fool you. Diversification matters. Let's see how the other options compare. On to the next. Next, real estate. Without buying property, REITs let you invest in portfolios of properties like malls or hospitals with just a few clicks. The learning curve is moderate. Know what types of properties the REIT owns. The big advantage? Dividends. By law, REITs pay out most of their income to investors. Risk is medium. You're diversified across many properties, but still tied to the real estate market's ups and downs. If the sector struggles, so does your investment. We put $100 into a REIT. After 4 years, the value dipped to $98.59, but we earned $11.93 in dividends. Total, $110.52, a 10.5% gain. Even when prices fell, dividends kept us in the green. REITs show the power of income-producing assets. You get exposure to real estate without the headaches of being a landlord. It's not risk-free, but it's a practical way for beginners to diversify. If you want steady income, REITs are worth a look. But remember, markets change, and so do returns. Let's move on to something even more volatile. Enter Bitcoin. Now, cryptocurrency, specifically Bitcoin. Bitcoin is digital, decentralized, and famously volatile. Some see it as the future, others as pure speculation. The learning curve is moderate. You need to set up wallets, use exchanges, and guard against scams. There's no passive income, no dividends, just price swings. Taxes are tricky, and you can't hold Bitcoin in a Roth IRA. So, what happened to our $100? After 4 years, it exploded to $652.24, a 552% return. Incredible, but not normal. Bitcoin's price could just as easily have crashed. It's the definition of high risk, high reward. Don't mistake luck for a plan. For beginners, Bitcoin is a speculative bet, not a foundation. Only invest what you can afford to lose. The lesson: huge gains are possible, but so are huge losses. Use caution, and don't bet your future on crypto. Let's look at something more stable: gold. For centuries, gold has been a safe haven in uncertain times. It's simple to understand and easy to buy through a gold ETF. Gold doesn't pay dividends or interest. It just sits there. Its job is to hold value, not generate income. Over 4 years, our $100 in a gold ETF grew to $140.10, a 40% return. No wild swings, just steady growth. Gold beat inflation and outperformed our stock pick. It's not a growth engine, but it's a reliable protector of wealth. For beginners, gold is a solid way to add stability. But don't expect it to make you rich. It's best as a small part of a bigger plan. Now let's see the power of the whole market. My favorite for beginners: index funds. Instead of picking one company, you buy a basket, like the S&P 500, which holds America's top 500 companies. The learning curve is the lowest. No need to research individual stocks. You're betting on the long-term growth of the entire economy. Index funds are passive: buy, hold, and let the market work. Risk is low, thanks to instant diversification. Many companies in the fund pay dividends, boosting your returns. Our $100 in an S&P 500 index fund grew to $179.57, an 80% return. Not as explosive as Bitcoin, but steady, strong, and reliable. It crushed our stock pick, REIT, and gold. This is the core principle: slow and steady wins. For most people, index funds are the smartest, simplest way to build wealth. Minimal effort, maximum results. Let's see how all 5 investments stacked up. Time for the final rankings. After 4 years, here's how our $100 investments performed. Last place individual stock, $67.70, a 32% loss. Fourth, REIT, $110.52, up 10.5%. Third, gold, $140.10, up 40%. Second, S&P 500 index fund, $179.57, up nearly 80%. First, Bitcoin, $652.24, a staggering 552% gain. The results are clear. Stock picking is risky, REITs and gold offer stability, index funds deliver strong growth, and Bitcoin is a wild card. But the biggest winner isn't always the best choice for everyone. Risk and reward go hand in hand. For beginners, safety and steady growth matter most. The numbers tell a story, but the lessons are even more important. Let's break down what we learned. What should you actually do with your first $100? Here's the real takeaway. Let's wrap it up. The biggest lesson: stock picking is a gamble, even with big names. Our Samsung pick lost money, proof that hot tips are risky. Bitcoin's huge return is tempting, but it's high risk. Don't bet your savings on it. For every big winner, there are many who lose big. Index funds quietly delivered nearly 80% growth. No drama, just results. You don't need to chase headlines to build wealth. The boring choice is often the smartest. REITs gave us income, gold gave us stability, and the index fund gave us growth. Each asset has a role, but no single investment is a magic bullet. The smartest investors diversify, balancing growth, income, and safety. Build a portfolio that fits your goals and risk tolerance. The real secret? Start early, stay consistent, and let time do the work. Don't get distracted by hype or fear. Investing is a journey, not a lottery. Use the right tools for your needs. This experiment wasn't about finding one winner. It was about understanding your options. Now, let's talk about the smartest first step for beginners. Here's where to start. After all this, where should a beginner put their first $100? While Bitcoin had the biggest gain, it's too risky for your core savings. Individual stocks are a gamble. REITs and gold add stability, but aren't growth engines. For most people, the S&P 500 index fund is the best all-around choice. It's simple, diversified, and proven over time. Make it the core of your portfolio, ideally in a Roth IRA. Add a small amount to Bitcoin or gold, only if you can afford to lose it. The most important thing is to start. Even $100 can grow powerfully over time. Compound growth is real. Don't wait. Start today, no matter how small. Your future self will thank you.